Hi, thanks for tuning in. You're watching Ask BQ, a show where all your stock market related queries get answered. I'm Smriti Chaudhary, and with me is Alex Matthew. Before we begin, let me remind you that you can send in all your questions through any of our social media channels, through the YouTube live chat, or the WhatsApp number that's flashing on your screen right now. Before we jump in, let me introduce you our guest for today. We have with us Mr. Avinash Gorakshakar, Director Research at Profitmart Securities, and Mr. Amit Bhuptani, who is the Derivative and Technical Research Analyst at Nirmal Bank Securities. Welcome and thank you for taking the time out. Now, before we jump into questions, Alex, tell me if you're excited about the Cricket World Cup today.
Who isn't, right? Everybody's been gearing up to this. It's been in the works for some time. And in fact, the action all begins today. We've been doing a little bit of number crunching on our end to try and figure out what the implications are for Indian companies and for consumption. And back of the envelope calculation suggests that $1.6 billion could be spent over the course of the next 45 days. And of course, a lot of companies are already reacting to the World Cup. Avinash and Amit, I'm going to start with this topic today. Of course, you'll have to tell me if you think that India will win this time. But beyond that, what stocks, according to you, are going to be the biggest talking points on account of this, and which stocks should investors consider picking up at this juncture? I'll start with you, Avinash.
Yeah, I think Alex, whether we win or not, I think the excitement will always be there, and I think we are all geared up for that. As far as stocks are concerned, I think you rightly mentioned the consumption basket, specifically the QSR and the pizza companies. Companies like Jubilant FoodWorks, Devyani International. I believe there's going to be a lot of appetite for these kind of consumption stocks because typically during matches, these are food items which are where we see a significant amount of consumption both at the matches level or even where people are watching these matches somewhere outside with their friends and relatives. So these two companies are definitely going to benefit in terms of the significant volume growth. And another sector which is going to be very significantly benefited is the hotel and tourism sector. I think, Alex, it is very clear that the industry is facing a huge supply crunch. Room rentals have gone up significantly. So bigger players like Indian Hotels or smaller players like Royal Orchid, Chalet Hotels, Lemon Tree, I think you're going to see a huge amount of upside coming in for these hotels. And probably, obviously the October to December quarter could be a very bumper quarter because typically this is holiday time and festive time. So you're going to see a very strong Q3 number from the hotel and tourism sector. So I think, these could be interesting stocks to bet upon, considering that there's going to be a very large volume growth push and obviously a margin accretion to these companies. So I think I would bet on Indian Hotels as well as Royal Orchid, and within the consumption pack, I would bet on QSR companies like Jubilant and Devyani International.
All right. Amit, what's your view on this? Any stock picks?
Definitely, overall, I expect I will go with the winners as I am also expecting that the hotel counter and overall the food counter would be the main supply chain for this World Cup season, and also the festival season is also picking up the line. And so, if you want to select a specific front, the counter which comes in my radar would be Lemon Tree. Lemon Tree, we are seeing that on the technical front, the stock is giving head and shoulder breakout. So I'm expecting the counter to go upside towards 130, 135 level in next 1 to 2 week of trading session. So you can bet on this counter with the stop loss of 112.
All right, those are the picks, and those are the stocks that you need to watch out for. Do let us know what you think in the comment section. Who's going to win today's match, for example, and also share your questions. We're starting the query segment of the show right now, so you can send in your questions on any one of the social media platforms, as Smriti pointed out. We've got one viewer on YouTube, Achi, that's already sent in a question, and this is on Epigral, which was earlier called Meghmani Finechem. And the question is quite a nuanced question, Avinash. And what he's asking is that he wants to know why the stock has been falling off late. Is it because of China dumping, or are the fundamentals of this company changed?
First of all, Alex, this company was created out of a demerger from Meghmani Organics. This was the parent company. And the earlier name was Meghmani Finechem, now the new name. Now, why has it been falling is because after a very successful couple of years, caustic soda is one of their key products, and they are into specialty derivative chemicals. So I think what has happened is that globally, chemical specialty chemical prices have come under pressure. And despite the fact that they have entered value-added segments like CPVC, the main product, that is specialty chemicals, has been under pressure. In fact, they've also been making caustic soda for internal as well as for external applications. So wherever the base raw material price starts falling, the end product prices also get impacted negatively. And our sense is that the September quarter is also going to be a little weak because prices have not improved as of now. They are still ruling pretty weak. So I would suggest the investor that if he has a position here, you will have to take a slightly longer term call here, because valuations have come off. Markets have been sensing that numbers are not going to be great for FY24. So you'll have to probably give in a time period of at least 12 to 18 months if you do expect a decent risk reward. The company has a very well integrated facility, but unfortunately, if product prices continue to keep falling and remain weak, then there would be pressure on EBITDA margins, and that's the key reason the stock has underperformed. So at best, it's a hold. No fresh buying suggested, but if you have it, I think you'll have to give a time frame of at least 12 to 18 months to expect some decent risk.
Okay, fair enough. Any cues that you can share, Amit, on the charts based on what you're reading?
Overall, if you look at the Epigral, the counter, I think is on the downtrend. Currently, the support for the stock is at 960. If the stock goes below 960 level, then more selling will be witnessed. The buying confirmation will come only about 1020. So if you need to make a fresh buying, only about 1020 fresh buying can be made. About that, the confirmation will get for the stock for the fresh buying towards 1150 to 1200 level. But at this kind of situation, at this point of time, I expect the stock to remain in the range bound session with the support of 960. So we should wait and watch for the breakout of the upside levels.
All right. Next up, we have a question from Rashida, and they're asking that they bought 3i Infotech at 95. Is it time to sell the stock? The stock is currently trading at about 41 levels. Amit, what do you think?
I think currently the stock, as per the chart structure, stock looks positive. The stock has shown a major sell-off from the upside levels of 110 towards the downside towards the 30. Now the stock on the monthly basis, we are seeing again that the support has been created for the stock towards 35 to 30 range. So once if the stock again goes below 35, then only the negative territory the chart will turn into. But once if stock goes above 45 level, then again buying accumulation will get started at this point of time. So you can create new long position at this point of time also. And if anyone holding this stock or other person also, then 35 should be the major support for the stock. Above 45, the stock will directly reach towards 50 to 50 to 58 levels.
Okay. Rajesh Exports is the next counter that we're focusing on. And the question is coming from a viewer on YouTube. And it is, why is it falling? But when I look at the charts, Avinash, I see that over the last month or so, it's not done too much. It's down about 2% or thereabouts. Of course, the biggest fall has come over the period of the last 6 months or so, if I'm not mistaken, down about 20% or thereabouts. So why is it under pressure?
So first of all, Alex, if you observe the fundamentals of this company, the EBITDA margins of this company are just about 1%. So it's largely like a trading business. They are into gold, jewelry, largely for the B2B segment. And despite having an integrated facility, they have an overseas facility in Sweden. Operating profitability has remained more or less constant. And I think most importantly, the markets have not been happy that now the company is diversifying into lithium batteries. They've got a PLI project approved for the company. So you'll see a lot of investments going into non-core activities. See, whenever companies which are into their core verticals, they go and diversify into something non-related to their core business, the market does not like these, kind of issues. So my sense is that, on the operational side, we'll have to wait for maybe another couple of quarters. Overall, I would believe that, it's not a company like Titan or Kalyan Jewelers, which has got a B2C kind of segment, which is more profitable and where, the retail reach is significant. So I would avoid Rajesh Exports at the current level and probably wait for another couple of quarters, Alex. But clearly, I think this diversification is something the market is not happy and quite confused. And in terms of cash flows, also this company has not been generating that kind of cash flows. In fact, just to add to your viewers, the dividend payouts have not been more than 2 to 3%. So, these kind of companies are generally avoided in the market.
All right. Amit, do you hold the same view as well to avoid Rajesh Exports at this point?
Definitely, because the chart structure still looks on the negative front. There is no point or at this point of time that we might witness some pullback in the counter. Once if stock goes below 480 levels, then more panic will be witnessed towards 420, 440 levels. So at this point of time, whomsoever is holding long position should exit at this point of time. Only about stock goes 550, then only we might witness some stability. At that point of time, there will be a negative constraint in this counter.
All right. Next up, we have a question from Akshay Purohit. He's asking about view on Manappuram Finance. He bought at 131 levels. Should he continue holding? Avinash, what do you think?
Yeah, I think Manappuram Finance can be held on. See, it's the second largest gold finance company in India after Muthoot Finance. And I think after a very long period, demand from rural areas, especially from the farming community, which takes a lot of short-term loans against gold, is definitely picking up. My sense is the September quarter should be quite reasonably good. And more importantly, companies like Manappuram and Muthoot are far more competitive than the other PSU banks or the private sector banks operating in the gold finance market, primarily because of their retail reach and because of their efficiency in disbursing loans in a very quick manner. So I would suggest that if the investor can hold on for the next say 12-15 months, Manappuram can definitely show decent kind of growth in the current financial year. But I think he needs to give a slightly longer time frame of 12 to 15 months and obviously can expect a decent risk reward.
All right. Amit, do you suggest holding as well for Manappuram Finance?
For long-term structure, I will go with Avinash, but on the short-term scenario, I am expecting some dip in the counter towards 135 to 137 range because we are seeing that stock is continuously facing it as a resistance of 152 to 154 level. So till the time the stock is not going above 154 level, till that point of time, we will see some sell-off from the upper end. So we should, at this point of time, I'm expecting some more profit booking towards 135 level. Once the stock comes near 130 to 135 level, then again new long need to be created. At this point of time, I am expecting the profit need to book at this rate.
Okay, we've got several questions coming on WhatsApp as well, and I will take all of them. Viewers, do stay tuned. We've got Isha Maheshwari who's asking about Jubilant as well as Zomato, Devyani, and Barbecue. I think we got a view at the start of the program. Avinash had given his view about some of these QSR chains as well. But the question that she's asking is, ahead of the festive season as well, would you consider adding to these, and how much should you add? Avinash, what's the view here?
I think my sense is, at current levels, Devyani International looks very attractive. Of course, Jubilant Foodworks is a market leader in a pizza market. So I think, if the investor has a 6 to 12 month view, of course, the World Cup season is for 45 days. But I think consumption has started picking up. And I think you're going to see a very strong, robust second half for these companies. So I would say that Devyani International as well as Jubilant Foodwork, if the investor can spread out, say, 50% in both these companies, that would definitely be a very good kind of investment proposition because clearly numbers would be strong. I think they would be seeing a lot of volume expansion plus margin accretion. So I think the investor needs to take a 6 to 12 month view here, and I think bet on these companies because these are going to be extremely popular at least in the very near term. And of course, numbers when they come out post the September quarter, you'll get a better sense as to what is the kind of volume growth and the outlook shared by these company managements.
All right. Next up, we have a question from Netra, and she's talking about IDBI Bank. Now, MPC policy is tomorrow, and that may have an impact on banking stocks. Avinash, Netra is asking if she bought IDBI at 50 rupees, and at what levels should she expect in the next 1-2 years? Amit, we'll come to you after this one.
Well, I think my guess is the IDBI Bank is a strategic sale candidate. I think a lot of activity has been done by the government in terms of road shows, meeting investors. So I think over the next say 6 to 12 months, technically we believe that IDBI could be sold off to a private player. And I think hopefully if the private player is a large entity, that would definitely re-rate the stock. The one good part about IDBI is that numbers have improved significantly over the last 1 to 2 quarters in terms of asset quality, in terms of profitability. So my sense is, at 50 rupees, the downside is more or less capped. And with the kind of credit growth we are seeing in the system, both retail and corporate capex demand is very strong. One could easily expect a kind of an offer price of at least 70 to 75. At least those levels are very much achievable. But it all depends on the event. That is when the strategic sale is announced, when the buyer comes in. and what kind of price he offers for the bank. But I think definitely you should hold on current.
Okay. So hold on to IDBI. That's Avinash's view. Amit, do you agree?
At this point of time, I definitely agree with the long-term perspective because if you look at the supportive base, the stock has created a base towards the 50 to 52 range, and on the upper end, we are seeing that 75 is the resistance. Once the stock gives a clearance about that resistance zone of 75, the stock will be in the new territory and it will get converted into the new range towards the 88 to 94 levels. So at this point of time, if anyone is getting a dip towards the 52, 54 level, then definitely long need to be created with the support of 50.
Okay. Avinash, interesting question coming in from Rajesh Maheshwari on WhatsApp from Indore. This is, by the way, a senior citizen. He wrote in yesterday as well, and I'm glad, Rajesh, that you've tuned in today as well. HDFC AMC is the name of the counter, and he's got 50 shares that he's bought at an average price of 2810. What is the short to medium term prospect that you can talk about when it comes to this counter? And what is the prudent course of action here? Should you hold for the long term?
Yeah, I think clearly, Alex, if he is bought at 2800 HDFC AMC, I think he's got to take at least a 2-year view because, at these valuations, HDFC AMC is not cheaply valued. It's a fairly expensive stock. And I think the kind of growth numbers which HDFC AMC is going to put out, I think clearly the market has already factored in FY24 earnings growth already into the price. So I think in the near term or maybe in the short term, I wouldn't expect any major upside or any major re-rating on the stock. But yes, if you have a 2-year view, it's a market leader in the mutual fund market. And despite competition, despite new players coming in, I would believe that, they would continue to maintain their supremacy in the mutual fund market. And I think that is a very large opportunity. But in the near term, please don't expect a big re-rating. I think the stock will continue to stagnate. We'll get some more news flows, post the September quarter numbers. But I think the markets are now getting a feeling that it's slightly, overvalued at this point of time, at least in the near term. For a longer term, yes, I think probably, over the next, say, couple of years, one could definitely expect a decent alpha here.
Okay. Why don't I come to you then on the charts? Amit, what does the chart indicate for HDFC AMC? What are the near-term triggers?
There is some counter view of mine for the short-term trading because if you look at the overall volume front for last 4 to 5 months, the volume has been added subsequently very strongly, and we are expecting the chart to come towards the 2750 would be the near resistance. Once stock gives clearance of 2750 level, then we might see some momentum to get more aggressive towards the 2900 level because the risk reward is also at a favorable zone. The support for the stock is at 2600. Once the stock goes below the closing front below 2600, then only we might expect the profit booking to be very higher on the higher note. But till the time stock is holding about 2600, we expect the stock to be on the positive front.
All right. Next up, we have a question on WhatsApp from Amol Sharma. This is for you, Avinash. He bought 100 shares of Power Grid at average price of 150. He wants to know the outlook for the next 1 to 2 years.
Yeah, I think my sense is that if he's purchased it at 150, then he should have been eligible for the bonus which the company gave. My sense is, I think, Power Grid is into a regulated business, largely power distribution. And I think a very stable kind of business where we are seeing a lot of capex being done by the company. Overall, if the investor is prepared for steady kind of return, because unlike generation, a regulated entity is not able to earn, that kind of profitability. So I think clearly from a medium to long term angle, he can hold on, but expect decent returns. Don't expect some multi-bagger returns here because it's a regulated business, and obviously corporate capex has been on the higher side. So they would obviously have some effect on their ROEs as well as on their return on capital employed going forward. But keeping a time frame of 12 to 18 months, I think it's better to hold. You could get a decent upside here.
Okay. Interesting question coming in from Mahesh on WhatsApp. He's writing in from Ulhasnagar. He's got 410 shares, Avinash, of Glenmark Pharma, which he bought at levels of 789. And he's asking whether to hold the stock for a year or so. Now, quite a few developments in this counter, right? If you're talking about the sale of JLS or Glenmark Life Sciences to Nirma, and the upgrade as a result of that, because I think the entire debt is going to get wiped out as a result of this deal. So what's the view on the fundamentals, Avinash?
Well, I think near-term trigger, as you rightly pointed out, Alex, is the JLS deal. I think Nirma buying out is going to help them get a lot of cash for this acquisition. And obviously, when debt goes off the books, I think their ROEs and their, obviously operating profitability will also improve. So I think, taking a 12 to 15-month horizon, Glenmark should do well. I think they are largely present in the US market. And fortunately, there have been no kind of abrupt US FDA related issues also. So I think you would expect a stable and a steady kind of revenue stream from the company for the current year as well as for the coming for the next year. They have a lot of new molecule launches also lined up. So I think definitely if the investor can hold on for 12 to 15 months, I think you can expect at least a 15 to 18% upside here.
All right. Another pharma-based stock. Netra is asking about Natco Pharma that average, and she bought it at 800 rupees. Should she continue holding it for another year, Amit? What are the charts showing?
As per current scenario, I'm expecting the stock to come down towards the 810 to 820 levels. At this point of time, profit need to be booked. Once the stock comes near 800 to 810, 20 level, at that point of time, again, you can be purchased for the time period of 1 year. I'm expecting the stock to go towards 1050 to 1100 levels. But current scenario on the short term front, the stock looks a bit negative.
We've seen quite a bit of volatility today itself, Amit, on the Nifty Bank, and I'm going to take the opportunity to ask you about this because if I'm not mistaken, we've come off quite significantly from the low point of the day. What are the key levels that you're looking at for the Nifty Bank?
I will talk about both the Nifty and Bank Nifty.
Yeah.
Overall, yesterday's session, we have seen that the Nifty was and the Bank Nifty was on the negative front. But on the closing front, the data on the derivative front completely shifted towards on the positive scenario because of the Nifty PCR, which was there in the first half in yesterday's session, was around 0.83. And on the closing front, it directly shooted up towards the 0.97 level. With that, we have seen that the India which was trading about 12 and it also dropped down towards 11.50 level. So these two positive factors turned out for the Nifty. While on the Bank Nifty front, the 44,150 was the initial resistance yesterday Nifty Bank Nifty was facing, but today it opened about that level and it is continuously holding the support of that level. So I am expecting Bank Nifty on the upside to go towards the 100 DMA level, which comes near 44,570 levels. Once the Bank Nifty comes to a 44,570 level and Nifty comes near 19,600 level, that would be the major point for the Nifty and Bank Nifty to get stable about that. Once the Nifty gets stable above 19,600 and Bank Nifty gets stable above 44,570 level, then we might expect a fresh buying to be witnessed in the market. But if we fail to get stable above that level, then again sell-off will be witnessed from that resistance zone.
Okay. Avinash, another bank-related stock here. Trupti Rao is asking about Yes Bank. The share is currently trading at about 17.2. Now the second quarter results will be out in a couple more weeks. What is your view on Yes Bank at current levels? Is it a good buy?
I think my guess is, I would like to wait for the numbers because in the last, Q1 numbers, I think the management had hinted that capital adequacy was slightly low and possibly they could have to fund or maybe come out with some further issue to ensure that their capital adequacy gets, properly, done. My sense is, looking at all the banks in the system, I think Yes Bank still continues to be a little, uncertain as far as their asset quality, as far as their loan book growth is concerned. There are many good banks, which possibly merit much more attention, something like a Federal Bank or maybe typically like an IDFC First Bank. So I would prefer to wait for the Q2 numbers, hear the management commentary and then take a call. At this level, I wouldn't be, ready to buy at these levels because clearly what kind of asset quality comes in the Q2, what kind of growth numbers come in. I think the management commentary only after a year, I could make a, assertive call. So till then, it's a hold.
All right. I think, gentlemen, we've gotten quite a few questions answered today, and thank you so much for joining in and for sharing your views. Of course, loudly proclaim that you support India in the World Cup that is starting today, and we all hope that India wins. Let's see how that pans out. But thanks, as always, for taking the time. Viewers, to you, thank you so much for joining in, and hopefully we've helped you get some of your questions answered. If you've got more, we'll be back tomorrow at 11:30. And we'll take all of your questions. Do stay tuned. This is BQ Prime.